Good morning, everybody. This is Michael from GammaEdge coming to you this morning on Tuesday, May 24th. We're going to be doing our morning strategy session. Paul's already posted the SPX, PVI, BMO charts with some great commentary this morning. I encourage everyone to go through that and understand where we're at within the complex. Taylor's updated the SPY, QQQ, and IWM also, so I encourage you to look at those and get your levels and mark them out for the day and set a trading plan for the day. I'm going to start with the SPX PM settled here. All expiries turned on. We've had some change in the structure. This was completely in the money and out of the money call dominated heading into yesterday. But we've had some of those calls close, exposing some in the money and out of the money puts around spot price. 4,200 overhead continues to be that liquidity level that we discussed yesterday pre-market, and kind of the if this then this thesis. I was anticipating us not getting over 4,200 yesterday, and obviously we had a gap down and then continued with that selling into some demand levels below us that we'll discuss. 4150 is an important line in the sand, at least for me watching this this week. We'll discuss kind of the transition levels also. 4170, 4165 are P-trans and N-trans at the moment. 4125 below us, that quarter level there, a significant amount of net delta sitting there. Those are out of the money puts, depending on what spot price does, if we go down and be able to capture those, or if those just continue to sit there. And then below that is 4100. That 4100 has been the kind of weeks, months, kind of lying in the sand below us. Anything below 4100 I think will embolden the bears. Really 4125 to 4100, and then we'll probably get some weakness further on down as these out of the money put speculators are present here. We do still have a significant out of the money call speculators to the upside, so they have not, as Paul says, thrown in the towel yet. So that continues to be present above us. So unless those really completely go away and we really start to see this erode, I don't really see some significant move down in the market. Just a kind of short-term pullback into these demand levels below us. Obviously that can change day over day, so we'll continue to watch this structure change. But a significant change from yesterday, from a total in the money, out of the money, call dominated, to some out of the money puts below us and some in the money puts right above us here. The PM settled 0 DTE, we see this is pretty much dominated by puts out of the money and in the money below us here. 4120, obviously significant level sticking out there that we'll watch for today if we get down to that level, and then 4100 below that. 4145 to 4150 overhead is really important. We see that transition come in right there at 4165. So we'll need to get above that 4150 and start making a march towards that 4165, 4170. That could be our overhead supply area to watch, to either get above and stay above, or come up to and get rejected and then see some sort of pullback and move down into this 4150 or below 4125. +1 DTE, same kind of transition areas as you can see right here. This kind of 4165, 4170, 4175. In the money and out of the money puts above and below spot price as of yesterday evening, and again 4125, that quarter sticking out there pretty significantly for your eye to see. So that's where I'll be watching on the downside as we open up and get a pullback down in that level. Below 4125, I'd be looking for the 4100 level, and I would look for that to be a definite demand level where we could get a price reaction and move back this way to the upside. For the balance of next week, kind of our crystal ball into how it's looking for next week, we do see this erosion and these out of the money puts in the money, or out of the money puts in the money puts here. 4150, significant amount there, 1.5 billion, 33,000 contracts. So we'll need to see us get above that and stay above if we're going to make a tranche up to 4,200. And then again, the quarter level 4125 is coming in pretty significantly below us. So I would look for that to be a demand level, as these are probably short-term speculators for these out of the money puts to be captured on any market weakness. We would look for those anticipatory to be closed As obviously this gets closer to expiry, these will continue to erode and be a supportive action here below us. So we'll watch that to see how that plays out. The combo complex, we still see call speculators present even though we're in a net negative gamma condition. This just means a little bit higher volatility. So again, 4150, 15 billion sitting there, 418,000 contracts, so significant level to get above and below. Obviously this is all expiries, so this is all the way out to 2024. So some of these are not short dated, but then we see 4100 below us, significant demand level. Anticipatory for me would be if we got down to that level, to see some sort of price reaction back to the upside, possibility to get involved on the long side of the market here if the CT starts to change and look constructive and the complex still looks call dominated. Above us, obviously 4175, that transition area, 4165, 4175 for the combo complex, and then 4200 overhead. And then we still see 4250 and this 4300, we can still continue to see those call speculators there. So nothing's really changed for the speculation to the upside. Just a little more change right around spot price, which can be short term, taking advantage of price fluctuations. Again, the landscape, 4165, 4175, really easy to see that transition there. 4200 still present, 4300 still large and present there, and then obviously we see the JPM short calls up there at 4320. We do see some of this downside coming in a little bit for people to take advantage of any pullback in the market, so just opportunistic pullbacks into demand levels for people to capture some gains on those puts. SPY, all expiries turned on, 420 overhead, that's pretty much what we've had marked for the past few weeks to months. And then we see demand come in down here. We see kind of this kind of messy transition around here, around 416 to 418, but we do see demand come in around 410. These are obviously in the money calls still, 656,000 contracts at 410, so significant liquidity sitting there of call versus puts. And then below that would be 405. I would anticipate 410 to hold on SPY. That's kind of where I'd be looking for my thesis to get involved on calls to the long side. If we get below 410, then we might see some more weakness down to 405. Zero DTE, same levels here, 410 on the downside, 414, 415 we need to get above to start move back up to 418. 418 is kind of where we gapped down yesterday, so we'll see how that plays out. I think we're about 412 pre-market on SPY. Rest of the week, expiry, again, kind of same areas, 410 sticking out there, very visible. So I'd look for that to be a supportive demand action as these out of the money puts get captured at least partially directionally, and the possibility to close those into that level there. IWM, I'm going to draw your attention to this. This has kind of been, IWM's been kind of outperforming the past few days. 180 was that overhead level that I continue to basically mark and pound for everybody to say that we really needed to get above 180 for us to start to see more risk on in the market and march up here maybe to this 200 level. We do continue to see this 200 level grow though, which is interesting. We'll watch the $ vol-u command. But if we get above this 180, I think we'll start to see some more risk on in the market. Obviously this 170 is just a significant level to play long against in IWM if you wish. That's where I'm playing long against ETFs. Just continue to kind of play long and then take some profit and then add on pullbacks if the opportunity is there. Again, we're above the 21 and 50 day, which is kind of psychological level in IWM. So I would watch for any pullback down into this area for supportive action in this 175. So we'll see kind of how that plays out. If we get below this 175 and the 21 and 50 and we start making our move back down to 170, then there will probably be total market weakness. So I would encourage everybody just to manage risk appropriately. You can look at the PVI charts for IWM. We do start to see some speculative calls above us, which I think is very opportunistic to see, which is great, but we still continue to see this 170. This is obviously all the way out into 2025, so long range. So what we do is we drill in, we'll look for 0 DTE here, so 177 is pretty important there, 180 overhead, and then we go out to the rest of the week here. Again, 180 overhead, 175 to 177 on the downside would be pretty important in IWM. to hold. But what is nice even through Friday is we do see in the money and out of the money calls right around spot price. So this is really opportunistic, and I think important to watch really moving forward, not only on IWM but the Qs also, and the liquidity stocks. Kind of what I was talking about through the morning call yesterday, or probably morning strategy session, was how a lot of these liquidity stocks were running into major supply levels overhead. So we'll pull a few of those up, kind of discuss that. We saw, so Meta on Monday, we saw this outside candle, this kind of wick. It actually held in pretty well yesterday, but Microsoft and Nvidia really have been the leaders, along with Amazon and Tesla and Google. We start to see some follow through to the downside here. Nothing really just alarming and falling apart. Obviously a little bit more volume here, but the rubber band was stretched to the upside. I think most of us posted that yesterday. I think Paul discussed this. So it's a pullback after this, long market run is very normal, ebb and flow. Honestly, I would definitely like to see some pullback and digestion of price that gives these levels time to digest, and then buyers accepting of higher prices if that's what is going to happen. Nvidia EPS is coming up, so I think that will be important, but you can just see how far we were stretched really above this run from down here in last November. Even the first of the year, I think Nvidia was up 100 or so percent. So just normal digestion and pullback would be healthy for the market. And SPY and SPX also, running up to that 4,200 on SPX. Kind of the same level that we've seen all the way back here, supply and demand from April of 2022. So supply, obviously it was demand turned into supply. We have had lower highs here, kind of into that 4,300, but this 4,200 really has been that same area overhead that we couldn't get above. So pullback digestion, even down to this 4050, 4100, 4050 would still be constructive from a daily, weekly, monthly time frame. That would be constructive for buyers to get some digestion and reevaluate kind of going into summer. Again, larger range, 3,800 to 4,200 is still present and intact, and really nothing has changed if we are going to digest in this upper three quarters of this range, which would be my anticipation so far for this. But below this 4050, I might change my stance a little bit depending on what the PVI charts look like, and we might see some more weakness even down to this 4,000. But constructive if we hold 4,100 and even back down to 4050. I think that would still be constructive on a TA time frame. And as long as we don't see those calls, those out of the money call speculators completely throw in the towel, and they're still present, this might just be opportunistic for short-term put players to take advantage of a little weakness and consolidation and build a nice flag here in the upper three quarters of this 3,800 to 4,200 range, and then try to move up a little bit higher. So anyway, that's my thoughts and thesis heading into today. Transitions are laid out extremely well. We have if this then this scenarios. Paul laid that out very well with the commentary. So we'll look for those to play out throughout the day and into the week. So manage your risk versus those levels and understand kind of where you're at and what the flows will provide us on any pullback or any move up really significantly. So if anybody has any thoughts, comments, questions, or commentary, we can definitely discuss that now. So welcome all new members. If you need anything, let us know. You can just tag @admin or post in hashtag questions. We'll get to you as soon as possible. And we should not be having any morning data issues. Everything looks to be up and running. Sorry for that yesterday. It was unfortunately out of our control. So,
quick question. I'm not really a SPY trader much. 410 SPY is roughly what? 4105-ish SPX?
Yeah, should be somewhere around in there. Maybe a little bit higher than that. But somewhere around in there, most likely.
Okay, I just kind of want to know how to translate the numbers in my head as I watch it.
Yeah, 4125 is important. Paul posted that. We went over that. Those transition, those areas below us. So really below 4125, I'd look for a 4100 test. But if we hold that 4125, we're really going to be opening right around COTMP on Qs. I say around. We're just slightly under on SPY. So understand those are out of the money puts that go in the money. So propensity to monetize is pretty high around that level. SPX will probably open right around COTMP, roughly, depending on where the ES is at the moment. So propensity to monetize can be pretty high, at least into the opening, and then kind of let everything settle out. So
Yeah, what often happens is you get that monetization bounce, and then it depends if they want to keep targeting lower puts or not. Then we kind of see what the complexion of the day is going to be.
Yeah,
exactly.
Sorry. Yeah, 4150 was definitely being targeted yesterday. Actually, through the end of the week, I ran that last night and posted in voice chat on the put side. 4150 is a pretty large. Yeah, I posted it just above. So 4150 was a pretty large level, at least on the put side being targeted. So, sorry, Paul.
No, I agree completely with what you're saying, with what Doc's saying. I think, we'll just have to watch the value command today. I saw yesterday, this is in hindsight because I didn't get to do a review until last night, but I saw the 4140s as kind of the last downside targeting, and there's a lot of power in watching the value command and just knowing where the distributions are going. I know many of you have asked for intraday coloring, or where are the changes occurring, and John and I will work on what that visualization is for you guys. But big picture, watch the value command, save those charts. You can mentally see how things evolve over time. So I think that'll be important for everyone.
Yeah,
Hey, Paul, a couple things on your morning commentary for the week. You said NTrans was 4170 and PTrans was 4165. Was that a typo or?
It was a typo.
Okay,
yeah.
Got it. Thank you.
And trans can't be above PTrans. So,
that's what I was thinking.
Yeah,
I was looking at the PBI and I was like, okay.
Yeah, I'm an idiot. So actually, it was a test. It was a test. It was a test. So
all right,
you passed.
For me. Thanks, Paul. And then, Michael, I don't know if do you have the live landscape? I'm curious to know what this kind of I don't know if you want to call it a low volume node. You kind of pointed that out this morning in your commentary about why we parked at 4145, but just below. Yeah, exactly.
Let me get the link. I'll be able to zoom in. Hold on. Let me get the link. I just posted this thing.
It's basically where the tag for 4165 is, right underneath the 5. There's a really low spot. I'm just curious to know what level that is.
Okay. Yeah, I'm running it now. It'll give me just a second.
I'm trying to count one bar at a time, but then I get cross-eyed and I can't count that far back.
Yeah, I know. It's easier just to zoom in. It's easier to get the interactive. So if you're new here, any chart you run, if it has a blue hyperlink, it'll be interactive, and then you can click on it and zoom in. So we're getting the.
Oh, is the landscape going to be interactive too?
That's a good question. I don't know about that.
You mean the landscape for the PBI charts?
Yeah.
Yeah, you'll be able to zoom in and do all sorts of stuff with that in the web stuff. Yeah, for the web stuff. Yeah.
On the end of month, I noticed 4175 looked like a low pressure parking area. Just kind of made that observation to myself. Did anyone else see that?
Yep.
Look at the end. Yeah.
Yeah, I mean, the transition, that's what I was trying to say, and that's what I said in the video. I mean, the transitions are they're within a strike or two, and they're pretty well defined. And so I think what everyone needs to take away is that we're below transition. That's kind of the first thing. The second thing is that we know into the end of the month, things have changed, right? So as Michael says, sentiment has changed. We've had a character change. Now it's up to the bulls to step up. And so, Doc, that 4175 is a real crucial level if we're going to continue this run. If we're not going to continue this run, it's going to be challenging simply because it's going to embolden the bears to continue to add those puts if we can't make progress. That'll, the narrative will say, oh, okay, the bulls are not present. The bears will say, okay, the bulls aren't present, therefore let's keep, adding some downside, and we all know what happens there in response. So I think your line in the sand for the end of the month of 4175 overlaps the end of the week. It overlaps the 1 DTE. It overlaps the 0 DTE, and it's very consistent just across the time frame. So when we see that structural alignment, you don't have to memorize each of the individual charts. You'll know conclusively exactly where we're at. It's showing pretty much that we're starting that sentiment change, and the bulls really need to step up.
Switching gears for a second, I know we've talked about this before, and it's still one of those I'm not sure kind of things. VIX, when I looked at the VIX GEX charts, I don't remember exactly, I think 2035 was calls going out of the money, in the money, and I've got a half-baked thesis that should be the top of VIX on this run. Of course, if they go in the money, then it becomes a squeeze, VIX trade. But I'm kind of making a hypothesis that 2035-ish, call it 20, pretty close to where we are, is going to be a VIX top. And again, this is we've talked about that, and it's just kind of something I've been watching.
Yeah, first of all, I don't know, because the VIX is directly tied to the demand, the implied volatility of that forward-looking 30-day volatility of the SPX. So it's difficult to say just where it could go. It could go, wherever. Now, what do we know that informs the VIX? We know that when there's liquidity available to the downside, that people monetize those puts as we fall. That monetization will put a damper on the rate of decline. We may still decline. The analogy and metaphor that I use is that feather that's just kind of drifting down, right? It goes side to side, but it gets lower and lower. We may have that happen, and that may put that upper bound on the VIX if it's not a hard sell-off. But if demand goes up dramatically for the downside, we get some sharp movements to the downside, we could go higher. But, Doc, just looking at the distribution of structures right now in the SPX, things are well hedged. If you look at the GEX ratio, for instance, and heaven forbid you look at the put-call ratio for the SPX, they're not like wildly out of balance. There are puts available. Therefore, demand is going to be relatively low. So I'm kind of the camp, 25 would almost be a stretch, but I have no idea. There's no analysis in that. It's just a gut feeling like yours.
Yeah, and the vague thesis is, putting aside the fact of, obviously VIX is related to put demand, just the hedging demand of market makers as they have to buy, sell, VIX futures or, correlated assets, short ES. I'm just wondering how that dynamic comes into play. And I don't know that I've seen anybody kind of address that directly, so I've got something in the back of my mind.
Yeah, I don't know. I don't know. So I'm not going to be able to offer any repeatable, concrete analysis for the VIX in context of our current climate right now. I mean, VIX has gone from 16s to the 19s now, where it was this morning. Demand's going up, but it's not out of whack, right? I don't know. It's so hard to judge VIX options against VIX contract term structure against VIX cash. The correlations and if this then that type of stuff that we do with the other equity and index ETF or index options, it doesn't follow those rules. And so I struggle. I'll be candid. I struggle to develop a set of rules around the VIX that are repeatable, that we could actually do anything with. And we're not there.
Yeah, I think that, Paul, I think that's because people use VIX, like market participants are using VIX different than they're using SPX. Like their intent is different. So the way that the way that people respond and act at these different levels is just different than what people do with SPX, because they're not trying to accomplish the same thing.
I think that's part of it. I think the other part of it too is that it's inherently pinned to a forward-looking term structure. So whatever, this is the disconnect between the VRP and where we are today and where we think we'll be 30 days from now, and that type of ability to play that in a repeatable nature. It doesn't lend itself to an if this then that type of thing, because everybody's playing the short-term nature, and I think this, Michael, I know I'm just kind of babbling here, but I'm trying to get this concept out. People play the VIX like it's a short-dated intraday thing, because it does respond intraday, but the actual horizon for the VIX is forward-looking. And so the VRP that's present in the VIX, the convergence of implied volatility down to realized volatility, is constantly moving, and it's modulated, it's influenced differently than, say, just simple demand or supply for an equity or an index. So it behaves different because of that pinning. And I think you're right. I think people play it differently. They have different objectives. It